Hello, greetings, and welcome to Dividend Blasters. This is our 78th video. Our topic today, and this is a continuation of the last couple weeks, is that I collected $4,100 in premiums this past week. Selling options. That's right. Last few weeks, I've been embarking on a new journey to complement my dividend investing and growth investing activities with options selling, primarily selling covered calls. I have added a couple of cash secured puts this past week, really effectively implementing the wheel strategy informally. So I'm going to talk to you a little bit about what I did this past week. I'm not going to give you a full primer on selling covered calls or selling cash secured puts. That's a couple of videos ago. I'm going to really just cover what I did and what I learned, and maybe a couple of mistakes that I made, but also a couple of good moves that I made. All right, let's press on. First, a disclaimer: I'm not your advisor. Purpose of this video is for information and education. It reflects my own personal opinions, my research, and experience as an independent investor for 30 years. Please do your own research and consult an advisor prior to making any major financial investment decisions. Covered call options. So basically, I did several this past week. I did over 50 covered calls, and I did 2 cash secured puts. I'm going to go through them and show you how I did. And I'm going to show you my entry point, how many contracts I sold, what the strike price was. Most of these are 1 week options. There's a couple that are a couple of weeks, but most of them are 1 week. And so I'm going to go through that right now. Let's get started. So the first one was Amazon. I did a 1 week covered call with a strike price of $200. I got in around 193.28, and I collected about $178 in premiums, plus a little bit in fees, and it closed at 197.96. So the outcome there was essentially, I'm always going to keep my premium, but there was not an assignment of the option, meaning I did not need to sell my shares. So I have my Amazon shares for another day of selling a covered call. One thing that I've added this past week, you'll see at the end of the bottom chart, is the Greeks, and have Delta, Gamma, Theta, and Vega. My focus here this week is on Delta. And ideally, when you're selling covered calls, if your ideal outcome is to not catch an assignment, meaning the market price is not going to breach your strike price that you've agreed to in the contract, it's ideal to have a delta below 0.3. It's kind of a rule of thumb. I'm going to start to incorporate Gamma, Theta, and Vega in subsequent videos, but let me keep it simple this week. Really just focus on the delta. All right, next one. And you can see the graphic. You can basically just see the strike price of 200 and also the dotted line that reflects where the strike price is. And you'll see the graph that shows the price gyrations throughout the past business week and where I got in and where it expired. See that by the green font and the asterisks. Next one is Broadcom. Broadcom, I sold one covered call with a strike price of $200. I got in at a little over 190, and I collected $219 in premiums. This contract expired worthless at a price of 195.54. So again, the Broadcom shares will live for another day. All right, next one. Chevron. Now, I like Chevron, and Chevron is a very safe stock to sell covered calls against. And I can tell because of the low delta. So I sold one covered call, and I got in around 158 with a strike price of 165, and it expired at around 157. Pretty good. I collected about $24. Now you'll notice that with the low delta, the premiums are less. I collected $24 with Chevron. It's really a risk reward thing. Next one. Energy Transfer, another energy company. So I sold one covered call, and I got in at $17.11. The strike price is $17.50. So it got kind of close. And here, this one was assigned because this contract ended. It was assigned at a dollar amount of $18.73. So these stocks are sold. And you'll notice that there is a high delta, a little bit high, 0.32. So it's above that 0.3 threshold. So I was really right below the money. You could say I was not quite at the money, but darn close to it. And the thing just took off midweek, and it really just kept going. So those stocks, those holdings were essentially sold. What is the risk when a covered call is assigned? The risk is that me as the investor or the seller, I am missing out on additional upside. And that's why I'm getting the premium. So I'm getting the premium to compensate me for that. Now, I'm not losing sleep because this was assigned. There are other stocks that I'd be kind of annoyed if they were assigned, and I'm going to get to that in a little bit. But this one I'm not. This one's also fairly cheap. I can get back in fairly easy, and I might. I may actually go ahead and sell a cash secured put early next week. I'm going to see how things go. All right. So the next one is Google. This one expired worthless, unlike Energy Transfer. I sold one covered call. I got in at 165.65, and the strike price is 170. And this contract expired, and it was trading at 165.49. I collected $167 in premiums. And you'll notice that delta is actually a little bit above 0.3. It's 0.32. So, on some of these, I'm taking a little bit of a risk. I think my rule of thumb will probably be if I do not want to part with the shares, I'm probably not going to choose a strike price where there is a delta of more than 0.3. Now, if I do want to sell the shares, I will sell in the money, and I will choose a strike price that is right in the money, and you'll see a higher delta. Likely there'll be a higher premium, but it's going to compensate me for selling the shares. So I will get that higher premium, and then I would also get the proceeds from the sale. But anyway, Google stays for another day. Next one, Coca-Cola. So I sold one covered call here of Coca-Cola. I got in at 71.50. The strike is 76. I collected $8 in premiums. Not a lot because this is a fairly safe stock. Not a lot of volatility, and you'll see that is a very low delta. It looks like it's 0.062. So it expired worthless, and the stock was trading at the end of the week at a little over $69 a share. Next one. NVIDIA. So here is one where I took a little bit of a risk and I got spanked for it. I sold two covered calls, and you'll notice that why am I breaking them out? Well, I sold them on two different days, but they're also in a couple of different accounts. So I tracked them separately. But I sold two covered calls. The strike price essentially is I'm sorry, I sold four covered calls, one in one account, three in another. So the strike price for one was 115, the other one is 112. I got in at 108.76 and 106.92. And all four of these were assigned. So meaning that I sold the shares. That strike price was completely blown out of the water. The contract ended, and the ending price was, I want to say, 121.67. So it just completely blew past it. Now, I got to tell you, at the time, it seemed like a pretty decent calculated risk. Now, I did get a little bit close to the strike price, but I thought that there would not be an assignment, but that there was. So you'll see that the gammas are, I'm sorry, the deltas are, one of them is above zero point 0.3, one of them is below, but they were both called because Nvidia was very volatile and very bullish. So what is my recourse? Very likely, I'll sell a cash secured put on these, collect my premiums, do it in the money, and buy the stock back. But I will set a price where I feel I will make money, or I will not lose a substantial amount of money. So I'm going to look at the price and I'm going to multiply it by 400 shares because that's what I have here of NVIDIA, and I'll see what the net is. Now, guess what? I got in fairly cheap a long time ago in NVIDIA. So if I pay a little bit more to get back in, that's fine because I'm still way, way, way ahead. This is going to be a long holding position for me because I totally believe in NVIDIA as a company. And I think maybe a lesson learned would be a little bit more cautious when setting the strike price, and maybe or maybe not, I won't use NVIDIA in options trading, but I do like the premiums. You can see that I collected 135 and then $518 for all four of those. So that was pretty decent. All right, next one, Pfizer. Well, Pfizer, this was an easy one. I sold one covered call. I got in when it was trading at 26.75. I set the strike at 28. I collected about $6 in premiums, so it's not a lot. It's very low. That is a very low delta, 0.132. So there's really not much risk of an assignment. Again, if the delta, the higher the delta is, the greater risk of assignment. And if it's at 0.3 or above, you start to get more into more of a risky territory. This position closed at 25.72. So it actually went down from the beginning of the week when I got into the options contract. Next one, Poetic Technologies. This is a small chip firm. It has actually been on a little bit of a tear, a little bit more than I anticipated. I sold six options contracts, two at one time and then four at another. Both of these were assigned. So I set strike prices of 350 and I got in at 348 and at 350. Now, part of me was just really doing an experiment. I wanted to see if I set it at the money, would it be called? As well as a little below the money. Would it be called? Well, yes, they were called. I will tell you, there have been times where, and I'm not even covering in this session, I sold a covered call on Palantir, and that market price breached the strike price, and I set it way out of the money, but it was on a tear before it started going down the last few weeks. And it was never assigned. I thought, oh, that's interesting. This is going to be assigned, but it never was. So I was taking a chance. This is a very cheap stock. We're talking $3.50. Now it was assigned. It closed at $3.93. The premiums weren't bad for a fairly inexpensive stock. I collected 44 and $40 a share, less a few fees. So it's not bad. I could go back in. I haven't decided. It's not something that I'm terribly concerned about. It's really more for getting a feel for the market and also different types of stock. Next one. Okay, this one here I did not sell this week. I actually sold this one the previous week. This is an ETF. This is QQQM. It's the NASDAQ 100 ETF premium. So I'm still tracking it. I actually set a strike price of 215, and I got in at what did I get in at? I got in at, where is it? It's a little bit hard to read here, and I can't remember. It was a week ago, but I got in cheap. I got in at, I think I got in the 180s on this, and I actually don't even have it here. But I set a strike price of 250. No, okay, I got it at 205. I see it now. So I set a strike price at 215. And the price has actually come down, and it's going down. It's been trending down, but I have another week to go. It closed the end of the week at around, I want to say probably 197 or 198. So we're watching this closely. And this one, I sold 6 options on QQQM, and this one I'm going to hold on to. Uh, Even if it is assigned, I will buy right back in. This is an outstanding ETF. But I did well. I collected over $1,100 in premiums last week. Uh, a lot of times with ETFs, you will not essentially find an options chain for 1 week. This one here is for a couple of weeks. Now for VOO, and I'll show you that later, the big S&P 500, I do see, and I have sold options for 1 week. That seems to be more of an exception. A lot of the others, it's 2 weeks or more. All right, next one. Here's another ETF, and this is the Schwab um, Dividend Growth ETF, SCHD. And I sold 12 contracts for this one. I set the strike price at $29. I got in at 28.36. And you might say, hey, listen, that's kind of close. These things move very slow. A lot of these ETFs. You're not going to see a lot of gyrations, especially with SCHD. And it actually went down and then it started to come back, but it actually expired at around 27.64, I want to say. So it expired worthless. With those 12 options contracts, I collected $186 in premiums. And this will actually close in another week. So it's one that I'm watching, like QQQM. We're going to go another week and watch it closely. And another one from Schwab. This is the large market cap ETF, SCHG. For this one, I also sold 12 options contracts. I got in at 25.10, and the strike price is 26. This one moves slow, but it's actually getting close to that strike price. So there is a little bit of a risk of assignment. You'll notice that the delta is below zero point 0.3, but the market was a little bit bullish late last week. It's been bearish and bullish. So a little bit bullish late last week. It's been kind of volatile. So there is a risk of assignment. And again, if this one is called and assigned next week, I will likely go right back in. And either I'll just buy back in or I'll sell a cash secured put and buy the stocks with that additional premium. That essentially is the wheel strategy. All right. Next one is SoFi. It's the digital bank. I sold 2 option contracts. I set a strike price of $12.50. I got in at $11.23. So yeah, the strike price is $12.50. This one expired. It ended the week at $12.09. I collected $34 in premiums, and you'll notice that delta is close to 0.3, 0.26, but didn't even come close to breaching it. So Tesla, okay, I wasn't happy about this, but I actually have mixed emotions. Been riding the Tesla wave up and down, and it's really been getting beat up the last few weeks. I was kind of getting fed up with it, and it just felt like maybe I should just get out. So I set the strike price at 230 when it was trading at 228. And I kind of like just thought, let's just maybe take the premium, sell the stock, and regroup. And so this is another one like Nvidia. I got in very early, so I've made a lot of unrealized gains. And so by doing this, I've made nice capital gains in this. So here we go. This thing was assigned, and I was a little bit surprised to see it end the week at 249. That was higher than we thought. Now the delta here was high, so I kind of went into this knowing that it would be assigned. I collected over $1,000, in premiums in this. So I got the premiums and I also got the sales proceeds. So I actually have done pretty nicely on Tesla. Next one. Taiwan Semiconductor. Okay, well, I sold one covered call and I set the strike at 177.50. I got in at just a little over 170. And I collected $150 in premiums, and this ended the week at 174.09. That delta is a little bit higher; it's 0.25. I think you're going to find that with these tech stocks, especially in the chip sector. But anyway, I got that 150, and we have our Taiwan Semiconductor for another day. Next one, UPS. So this is interesting. This one here, I did a cash secured put and a covered call. Um, so I got in to both positions when it was trading at, well, the first one, the put was 122.19, and then the call is 121.55. Obviously, we want the put to go in a different direction, and it did, and it was a sign. So I bought it at 120 at the strike, and then it actually came up. And so with the call, I got in at 121.52, and it came back up, and it expired at 116. Both of those premiums I collected $68 and $38, so not bad. And I have both my holdings back in different accounts. All right. VOO, the Vanguard S&P 500 ETF. So I sold two covered calls. I got in at a little under $517 a share. The strike is 522.50, and it expired at 517.46. I collected over $1,010 in premiums. This delta is higher. It's 0.39. So I took a risk, and I did okay. All right. Verizon, another cash secured put. And why am I doing these cash secured puts? Because the previous week I did cover calls, and the one on UPS, one of the UPS ones, and this Verizon one were assigned. I did want to get the shares back, so I did cash secured puts. Both were assigned, and you can see that I collected $4 for Verizon. So I collected the premiums and I got the shares back. All right, next one. And this is the last one. I sold two covered calls for Walmart, and I got in a little under $88. And the strike price for these were 92 and 91. Both of these expired worthless because the final price when the market closed was a little under 86. So I collected 26 and I want to say $33 for both of these. So that's how I did. And you'll notice that for stocks like Walmart, for UPS, for Coca-Cola, the deltas are much lower because there's less volatility. You're going to see more volatility, obviously, in an NVIDIA and in a Tesla. The premiums are better. So you just need to exercise caution, and that is something that I will plan on doing. Uh, I will tell you that if I come across a stock that I want to sell, um, I will probably set a strike price in the money and sell a covered call, presuming it'll get assigned, collect the premium, the higher premium, and the proceeds from the sale. But a lot of these I'm doing, I want to keep the stocks and I want to pocket the premium. That's the plan. Here is just a summary table. You can see all 52 options that were done. I collected $4,167 this past week in premiums, less about $30 in fees. So that leaves me with about $4,135. If I were to look at the past 3 weeks, I'm probably up around $9,000. In fact, I will actually include that in the next video so we can see how I did for the past month. And folks, that's it. That's it. I did want to share with you that if you are interested in getting more insight into investing, dividend, growth, options, There's great insight from Seeking Alpha. I'm an affiliate partner and a subscriber. If you're interested, you can click on one of the links, one for premium or one for Alpha Picks or a bundle, and get a free trial period, 7 days, and you can get a discount. Click on the links. I'm going to provide them in the comments, but I found Seeking Alpha to be an invaluable resource. You can check me out on social media if you're interested. I'm on X, Instagram, and Facebook. Lots of good content there. I have colleagues that I collaborate with, and they have good material. And I'll just throw a shout out to Dividend Snowball, who is also on X and Facebook, um, as well as Quality Dividend Investing and Growth, Saving and Investing for Beginners, and Dividends Are Us, all colleagues on Facebook. And folks, that's it. That is it. I hope you found this to be enjoyable and informative. And if you would, give this video a like, share with a friend, hit that notification bell so when the next video comes out, you'll know. And we would love for you to subscribe to our channel. Until our next video, have a wonderful day. God bless.